I'm 680 News senior business editor Mike Eppel. We saw a record high for the Toronto Stock Exchange main benchmark today, surpassed its previous peak, which was reached back in April of this year. The catalyst wasn't anything specific to Canada. Rather, it was what was going on in Europe first off this morning, where the European Central Bank announced an interest rate maneuver. They're cutting rates on some benchmarks to below 0% and adding a bond buying stimulus program that will keep interest rates artificially low. They're trying to ward off a recession and, of course, the overhang of Brexit. Then there was the positive signals on the U.S. China trade file on reports that the Trump administration was set to offer up an interim deal with China to try to diffuse some of the trade tensions. Now, that was dismissed by the White House, but nevertheless, the expectation that we're going to see face-to-face negotiations early next month. The Dow Jones Industrial Average today up for a seventh session in a row. And as for that TSX, it was up and is now, for the year, posting a gain of better than 16%. Well, we had a campaign promise from Liberal leader Justin Trudeau today on the housing affordability file, saying that if reelected, Liberals will raise the threshold on the first-time homebuyers plan. Now, that just recently went into effect, but at a cutoff point of about $500,000 for first-time homebuyers, it was seen to be too low. Well, he's pledging to raise that to $800,000 or thereabouts for Toronto, Vancouver, and Victoria. And the Canadian Real Estate Association launched its information campaign on the federal election as well, pressing all of the parties to pledge maneuvers on housing affordability, specifically on that mortgage stress test. Maybe more regional changes to that. As the Real Estate Association says, no two markets are the same. Well, the Hudson's Bay Company posted a big-time loss in its second quarter, nearly $1 billion worth of red ink. A lot of that had to do with first one-time restructuring charges. The Bay has been reorganizing. They recently announced the sale of their Lord & Taylor discount or department store brand, rather, to La Tote in a more than $1 billion deal. But nevertheless, the Bay saw some slumping sales. They're discontinuing 300 brands, which they say will be replaced by about 100 more new ones that they figure will be better sellers. At the same time, the falling sales hit by a so-called hyper-promotional environment, which saw a lot of discounts, which led to lower revenues for the HBC. And Smile Direct Club was the latest new stock to hit Wall Street today. Stock sale that raised over $1 billion, but for investors, nothing but frowns for the direct-to-home teeth alignment company. In its initial trades, Smile Direct Club shares tumbled 14% on the first day on the NASDAQ. From the 680 Newsroom, I'm Mike Eppel for City News.